Welcome back to the 90s podcast hosted by yours truly, Kevin Thompson, founder and CEO of 90 Capital Group. Thank you guys for joining me. As I always say, subscribe to the channel. As I always say, go and get my book, MLB to CFP, live on Apple and Amazon. You have any questions, comments, or concerns, you can email us at info@90capitalgroup.com. Send us your questions. Go to the website at www.90capitalgroup.com. Schedule your appointment. As you know, we're here to do what? Educate, empower, engage, and also entertain. Follow us on all social media channels at 90cap or at MLB to CFP. And subscribe to our Substack. Now what? Today, this is a wonderful episode. We have Jason Wenk, founder of Altruist. We're talking about the age of disruption. You don't want to miss this episode. You don't want to miss this episode. Without further ado, Jason Wenk, welcome to the show. Let's get it. I got my man, Jason Wenk, Altruist, doing his thing. I am excited and I am humbled that you're joining the show today. Thank you for joining the 90s podcast today, my friend.
Well, my absolute pleasure. I mean, the honor's in all mine. I talk about being humbled. I don't think you realize I've been following you for a while.
Oh man, that's anything crazy?
The transition into the industry and just like I watch all of your YouTube shows with our mutual friend downtown Josh Brown, and so what a pleasure to join you, man.
Hey, I'm not gonna hate on you for wearing the CA hat today. I'm gonna let that one go. I mean, hey,
I could have been my Dodgers hat. I didn't know if that one would have been worse, so I just went to California broadly.
Hey, you got to respect the Dodgers. They're spending money. They're doing what owners are supposed to do, make good baseball teams. So I don't know why everybody's upset. Who knows?
This isn't a new playbook. I mean, I'm pretty sure the Yankees have also spent a fair bit of money in the last, couple of decades.
Hey, no comment on that. No comment on that. But today we're talking about Altruist, the day you guys just woke up and just chose violence. I mean, I'm not saying it to be in a pejorative or anything like that, but February 10th comes around. You guys announced this Hazel tax planning software, and then the industry starts just running for the hills. Let's just start there, my friend. Like when you woke up, or we'll just start January. Was that always on the docket to release like a tax planning version of Hazel from the Altruist platform?
Yeah, so we've been working on it since last year. And I'll say like the part that's very like an under the radar part about the tax agent that I'm really proud of is that the team had that exact date as the release date, right? So they had this, we're going to release into beta. They had a date set, and then we're going to go through the beta. We're going to do a full GA release, and then we're going to do a formal announcement. So the actual product went into to GA the day before that Monday, last week Monday, and then it was like, hey, we'll do a press release on Tuesday, and we were really proud of the work.
Yeah.
Obviously, it went a bit bonkers, but what I think is again like the under the radar part that is impressive is that the team executed absolutely flawlessly because the timing couldn't have been better. I think look, had we released that 2 weeks or 3 weeks later, maybe the world doesn't care as much, but you may recall like the prior week, there was the SaaS apocalypse in the market. All the SaaS stocks were getting hammered. Look, the market's looking, and they're trying to figure out where will AI be really disruptive. And then we just happened to release the most powerful agentic AI in wealth management, kind of right at that perfect moment when people were looking for where AI could be disruptive. So again, super proud of the team. They've been working on it for quite a while. In fact, we have 3 agents we'll release this year, and it was even I give full credit where it's due. It was the team that suggested going with the tax agent first, just like the nature of the calendar year. They're like, hey, let's get a tax agent out early enough in the year to help people with tax planning while it's top of mind. And then we'll kind of do the other agents, subsequently. So like a confluence of things, right, all kind of occurred in such a way that it created, certainly the most viral thing I've ever been part of.
Oh my God, I can't imagine what you were feeling. You're like, what? whoa, market caps are
Yeah.
getting just cut off at the knees. What's going on? And I can
Yeah.
imagine because that was a great article, by the way, that you reposted today. I actually read it to see exactly what was being said. But yeah, you have the big. I'm not going to name any of these guys because they don't need their names on this show because this is about altruists. But we had these large players trying to figure it out because you have this agentic AI sitting inside of a custodian, now being able to read what's actually going on with people's accounts and making good tax decisions based on that versus just, who knows how they get their information. But I want to ask you one question. Sitting in the disruptor seat, how does that make you feel? When, like just taking the industry by storm.
Well, I mean, that's very generous to say. I think um, if anything, I forget the exact saying, but there's a phrase, it's about like the longest overnight success story or something like that. And what people may not realize is that,
Yeah.
I started building, like I wrote my first lines of code, to kind of serve this industry
Yeah.
in 1999, right? So, I mean, I'm 26 years
Wow.
into kind of building tools for wealth management, financial
Mhm.
services, investment research, and so forth. And obviously the case of Hazel, when I first started Altruist in the very first investor pitch deck, which was I drafted it in the summer of 2018,
Mhm.
I had this sort of section that was called Altruist Intelligence, like our simple play on AI.
Mhm.
And I had a list of all the things that I would expect us to be able to do. We were going to kind of build our data infrastructure in such a way to allow us to apply machine learning and
Mhm.
eventually, what today we now know as foundation models, but again, these sort of large language models to make advice better, make it more affordable, make it more accessible, right? And so the whole section, right?
Yeah.
And I remember, so, raised enough money to get the company started, started working with some early advisors, really just on ideation. I was kind of sharing prototypes, walking through kind of the idea, wanted their feedback. And one of the most common things I would hear is, okay, I love everything that you're talking about, digitizing everything, lightning fast account opening, commission-free trading,
Yeah.
fractional shares, beautiful user interface. But I'm not really, I'm not really that interested in AI. I think you should
Mm.
take that part out, right? And because this was, 2018, 2019,
Yeah.
2020, people just weren't ready for it yet. And so this whole kind of like, yeah, kind of disruptor taking this, like I would say like there's a bunch of reasons that we could have failed along the way,
Yeah.
could have listened to naysayers, could have listened to people who told us not to do certain things. And somehow we kind of kept at it, kept grinding, pushing really hard, and then pushing to do innovation where it wasn't necessarily being asked for. Like no one ever asked for us to build a tax planning agent, right? That
Mhm.
wasn't like, oh, we had 500 feature requests and it was being upvoted. It was like it was an idea of like where could we provide a lot of value in a part of the advice kind of food chain of work to be done
Yeah.
that is typically reserved for people who are really wealthy, has a really high cost, and is incredibly laborious, laborsome, right?
Yeah.
Laborious. So let's go for it and build this tool. And obviously, it's like again, it looks like an overnight success story, some great big idea. The
Yeah.
reality is, again, it's like for me personally, it's decades of work, and even for the team, it's like multiple years 70, 80, 90 hour weeks grinding to build something that we're really, really proud of. And it's really helping a lot of people. So long-winded answer, but there you go.
It's like the painter. I can't think of his name right now, but he was just kind of like doodling on a napkin and he's about to throw it away. And then someone says, "Hey, can I have that?" And he says, "Yeah, there was a number out there." And he says, "Oh, no, I'm not going to pay for it. It took you 2 minutes to do it." He said, "No, it took me a lifetime, my friend. It took me
Yeah,
a
exactly.
lifetime to do it." So what may seem like a doodle to some is actually a lifetime for others. So I'm going to say this. I wish I knew you 3 years ago when I started in my RIA. And again, you guys were out there, but you weren't out there like you are today, because there were some things that were missing, right? There were some things that were missing. Like for example, if you guys were where you are today 3 years ago, you could have saved me like 15, $20,000 a year, man. It's crazy. It makes me angry, but it is what it is. So
Never too late to come home, Kevin. Never
it's
too.
it is never too late, and I'm working on it, man. Like I
I
had
know,
my
I know. I appreciate it.
I'm working on it, man. So let's talk about Hazel. Like the I still don't understand what it actually does, but I'm excited for what it does. So let's unpack that real quick. Like, what should advisors be expecting from Hazel moving forward? And where are they still missing? Like, where are some of the areas you got, and without telling me too much, of course, you got some stuff coming down the pipeline, but what are some of the areas where you think it's missing a little bit?
Yeah, I mean, I'll kind of back up just a little bit, kind of like
Mhm.
zoom out just a little bit, and I think probably worth noting that so I view our business as Altruist. I view it as like a wealth platform.
Yeah, 100%.
And so, think of a platform has multiple kind of layers, if you will. There's custody, clearing, software, so forth. I view Hazel as an AI platform. So it today has, let's call it a half dozen key features, but it'll keep building. So we'll continue adding more kind of vertical integration of
Hmm.
different AI workflows and agents. Um, and so today, when I think about Hazel, like the first things we built were pretty simple. We're looking at the industry and going, well, where could we be different and better than other AI products for advisors? Like there were already a couple of note takers and kind of uh, uh, beyond note taking, it might be like data reconciliation or kind of data management, kind of syncing, synchronization of data across your various tools.
Hmm.
And so we thought, well, we could not do those things, or we just
Yeah.
go ahead and do those anyway, because my kind of view is like nobody needs six or seven or eight different tools.
Hmm.
And if those AI note takers are predominantly going to stay as AI note takers, they have a utility, but they're more of a feature than they should be a product or a company.
Yeah.
And so the first thing we built was note taking, data synchronization, so like meeting prep, meeting notes, meeting follow up, and so forth. Very simple. We made sure we built it to where if you tested it side by side with any other product in the industry, our goal is like let's just like annihilate everybody in independent evals. So when we're
Okay.
evaluating it, like we want it to be the best of that. And that'll be like the table stakes, like simple things. And so we did that. And I'd say we succeeded there. We then built direct integration to Altruist, and this is where things start to get different. So all of a
Yeah.
sudden, you start to see why we view Hazel as an AI platform and not just like a note taker or an administrative assistant or generic assistant. Of course, it does those administrative tasks quite well. But the other thing that it does really well is it has access to all of the Altruist data in real time and also data to other custodians that we can integrate with on the Altruist platform. So companies like Schwab, Fidelity, Pershing, et cetera, all of that data can live inside of Altruist. And as a result, it all can also be available to Hazel.
Hmm.
This starts to give Hazel a little bit more intelligence than any other platform out there. The next thing we did is we enabled Hazel to have both memory and the access to the internet. So sort of agentic internet search. This allows Hazel to use deep reasoning, really advanced multi-reasoning models. So now when you start to like kind of put it together, I'll give you like real life use cases. So,
Hmm.
if you think about the administrative assistant, doing meeting prep is really easy. Like got a calendar meeting come up, you and I are chatting. It's able to look back at the CRM and the email history, but also look at your Altruist accounts and see
Hmm.
everything that's happening. So it's very easy to kind of present, hey, here's everything that you should know before that meeting with Kevin, both past conversations, things happening in their life, but also what's happening with their portfolio, their financial plan, so forth. If in that meeting you say something to me like, hey, I'd like to take up your recommendation on doing a mega backdoor Roth conversion, right? Some
Hmm.
planning strategy. That's a workflow that would need to be done at your custodian. So Hazel can, of course, do the calculations. Hey, here's what's in that account. Here's the strategy. Can present the plan. Make it very easy for you now to implement the plan at the custodian.
Hmm.
If you have some questions, maybe I send you an email follow up after the meeting, and you as the client come back and say, hey. One question I forgot to ask you in that meeting, but is there's been some legislature changes in my home state. Let's say I live in whatever Illinois,
Hmm.
and I'm wondering like if my accounts are properly titled to make sure I don't have to pay any more estate taxes than
Gotcha. Yeah.
necessary. Illinois has strange state tax testate rules. Again, Hazel can go find the legislature, can go look at all your accounts, can find all of your account titling, knows who the owners are, beneficiaries are, which accounts are held if they're in trust by different, kind of trustees, and then can actually answer the question. So you as the advisor never had to go and look at the legislature, didn't have to go and look at the accounts and check the titling, build a spreadsheet, map out, kind of like the different ownership structure. It literally does it for you, perfectly responded, email sitting there, draft in your inbox, you can send it back out. And I can go on and on, right? But like, so we started with those basic administrative functions, and now we're building in like the next level, like much more complex agents. So like obviously the tax agent, for those who aren't familiar with it, you basically can drop in anything related to taxes, and Hazel will give you an analysis and set of recommendations.
Even Schedule
And
C?
everything, yeah. So you can drop in like the most complex business schedule. So you're an EA, so
Wow.
you'd understand this
Yeah.
better than most advisors and
Yeah.
planners, but you'd be shocked how many CPAs and people with masters of taxation are sending me notes, kind of being like, "This is mind blowing to them."
I
Right?
gotta get on this thing, man.
It's well.
Yeah.
So you can drop in. So imagine like you have a client that's a really complex, 1040, like,
Hmm.
and they own multiple LLCs. They've got K1s from a bunch of LP interests. They've got four LLCs, some taxes, partnerships, some as single member. They've got, all sorts of like strange real estate with depreciation schedules. You just drop that in. Hazel will summarize the whole thing and it'll create a beautiful outlet. So basically, the visualization is your screen splits in half.
Hmm.
One half becomes the context where Hazel's thinking, it's giving you feedback, it's like dropping, you can chat back and forth. The other part is it's beautiful software output. So visual actually does generated graphics, creates interactive graphics. It just simplifies. So like, for example, I dropped in my tax returns, 550 pages, insanely complex.
Yeah.
And Hazel can within 2 or 3 minutes give me this incredibly good summary, show where there's maybe some missing schedules of depreciation that I could have
Mm.
taken. Summarizes any tax strategies I'm eligible for that I should be. Ask questions like prompts questions like, "Hey, looks like you sold a house. What did you do with the proceeds?" And all that kind of stuff. I shared it with my own personal CPA because Hazel found $47,000 or something like that of like missed tax savings
Oh,
opportunities.
I mean, you just filed your CPA.
No, no, no. Well, I love
I'm
her.
just
I'll
kidding
never
with you.
fire her. But she just was like, she's like, yeah. She's like two things. Well, three things. She's like, one is, where'd you get this from?
Yeah.
Because I think she thought I was like, looking at other accountants or something.
Yeah.
Two was, yes, it's accurate. And three was, I was going to go ahead and do that. I was going to file an amendment, but we ran out of time because of,
Yeah. Yeah. Yeah.
deadlines for your extension.
Yeah.
But suffice to say that like you can drop anything in, and it doesn't matter if someone's got a really simple like single filer, W-2 income only, or again you've got the most complex like almost family office like situation, and Hazel can give you these like beautiful outputs you could share with a client that says, hey, just want to make it easy for you to see what's happening, and here's a few ideas of things we can do to help make your tax situation better now and in the future. And if you want to test ideas, so after that analysis, you could say, hey, um, Hazel, I do want you to go ahead and forecast like these Roth conversions staggered over the next 3 years. Can you build an illustration of that I could share with my client, right? And then
Mm.
Hazel will actually do the calculations. In full transparency, what Hazel will do is Hazel will write the software to the calculations. So
Mm.
it's important for people to note that Hazel is not using a language model to do these calculations. Hazel's using a language model to read the documents, um, build the context around what are the documents and the data
Mm.
sources. It then uses the internet to go do research on like all of the available
Mm.
laws, rules, planning opportunities eligible to that client, given the context that was just discovered in the documents.
Mm.
And then finally, it will write software to do the actual calculations to build the visualization that you see in the front end. This allows it to have to remove the hallucination kind of impact
Oh,
of
good.
language models, where they're just kind of forecasting the next best word in a sequence, right? Like we don't want that. LLMs are not particularly good at math for a number of reasons, but we want to eliminate the need for the AI through the math. We want the AI to just write software. AI is really good at writing software, right? I
Yeah.
mean, we see it being used all the time. So that's kind of what's happening. Big, long, like what's happening. Now, again, we'll launch more and more agents. And what you'll find is like my general view is that in some future state, maybe this happens in the next 12 months, maybe it takes 18 months, maybe it takes 24 months. I would be like, I would be floored if this took longer than 24 months. I think it's higher probably this happens in 12 months than in 24, but I'd peg it in that range. Where the only two tools that an advisor would need would be Altruist and Hazel, and everything else would be unnecessary, right?
Oh,
So
wait,
there
wait,
needs to be
wait,
any
wait. You just said something there, man. You said only two tools. So you're talking about getting rid of the CRM. You're talking about getting rid of the financial planning softwares. You're talking about having everything under one roof through your platform. Is that accurate?
if you wanted to, right? I think
Yeah.
I
No, I
think
mean,
there's a
of
world where
course I
people
want to. It
will.
saved me money.
Yeah, I think there'll be a world where people keep their CRMs in some cases because they want to have maybe the beautiful thing about when the AI tools are built the right way, like the way that Hazel works, is everything Hazel does, it can sync it back to your CRM. But I
Hmm.
think what will happen is the CRM in many cases will become just like a system of record. It'll basically become like, basically a data lake that advisors will store their information just so they have a record that's
Hmm.
easy for them to take and extract whenever they want, but they'll no longer log into it and use it as the place where they'll enter data. They won't need to. And the same is true around most software because if you think about like the architecture we used to build the tax mode, that same architecture can and will be used to build financial planning mode. And you'll be able to build again, whether you want a very simple financial plan, you just want it to be 5 pages or less, and it's for a client that's got a simple savings goal, but you still want it to be rooted in, kind of empirical evidence. Or again, you have the most complex financial plan and analysis and portfolio, et cetera. um, like the challenge with software today, if we think about how software is built, is that it's built with these interfaces that require you to contribute information to the
Hmm.
interface, right? So you're
Yes.
logging in and then all of the calculations are effectively just linear calculations happening on the back end based on the inputs you put in. So it's just basically like prompting you to which cells to fill in data, because on the back end, they're just running an algorithm across that data to create an output.
Yeah.
And as a result, the software is pretty limiting, right? So
Yeah.
almost everybody I've ever met, if they're being honest about, let's say, their financial planning software, they would say things like, "Listen, I use XYZ planning. It's pretty dang good. I just wish it would do this, this, and this different."
Yeah.
Or I'll meet people to say, I actually have to use two different planning softwares because for my more simple cases, I do this. And for the more advanced cases, I do that. Right. And with AI, you won't have to do that. Like you'll be able to just prompt Hazel, for example, help me build a perfect lightweight financial planning template I can use for all my clients. In fact, we'll have one out of the box for you. You can just load it and then use it or modify it if you want, right? But and here's the 10 vectors I think are important for the basic tenets of financial planning. And then we'll create the visualization. Here's what the plans look like, and then you can say, don't love page two. That chart's too small. This thing's too different. I want this logo bigger, right? Like you
Mm.
literally can just give it the feedback. Okay, I've redrafted your planning template. How does it look? And you're like, damn, that looks like exactly what I want. This is
Yeah.
precisely what I want for like my core clients. You save that template. Now it's in action. Anytime you want to run a financial plan, you just say, hey, run my basic plan for Kevin. Do the same thing for your advanced version. Now you don't need, there's no more even need to type data in anywhere because the data already exists. It exists through
Mm.
the meetings you've had with your clients. It exists through the emails you've had, the documents they've shared. So all of that stuff is being collected by Hazel. It gets run through a canonical modeler. So basically cleans the data up into a really, really nice simplified sort of data model that can
Mm.
now be pumped through into any of these different AI driven applications. And so, from that perspective, you end up having, sorry, there's somebody knocking on my window,
I know. I know.
and I
I've
realized I'm
been
on a
there.
recall. It was actually a DoorDash delivery. Somebody must have ordered some food here at the office.
No, no,
Yeah,
no,
maybe.
but I just have a couple more questions for you though,
Oh yeah,
because you
please
said
do. Yeah,
no,
sorry,
no, no, no.
DoorDash.
You said so. One thing is, damn it, I'm sold, right? Where do I sign up? And I'm trying. I had my my free my online free thing for a while. And I don't know, I didn't remember even signing up for it, but I was like, oh damn, it's already, already gone. So I need to
I'll
go
hook
back
you
in
up
and
with
get my
more trial, man.
yeah, give me one more trial, man.
Yeah, I'll give
But
you another
but
one. But otherwise, just Hazel.ai is where people can go learn more about Hazel.
yeah,
And the thing that's also worth noting about Hazel is that it's available to anybody. So you don't
yeah,
have to be on Altruist. You could be with a broker dealer. You could be an
well
employee advisor, a
be
W-2
careful with
somewhere. You
that.
could be at any custodian anywhere. We're even finding people using it around the world because if you think about how I just described how the platform architecture works,
Mhm.
it's not like it was trained to say, someone uploads a document, look at it compared to the Internal Revenue Code. It's
Yeah.
actually saying someone uploads a document, use AI to fully understand the context of the document, and then use the internet to go out and grab the relevant, tax code or tax library for this analysis, which it could be literally the tax code in Portugal, right? Like it doesn't
Yeah.
matter necessarily where it is. So it gives people, the ability to kind of use these really powerful AI tools, no matter where they have their assets at.
But and so one thing is it scares me a little bit. So you're saying that Hazel's learning as you go is learning you how you run your business, how what basically like almost like not like say like a chat GPT because chat GPT learns you, but they learn how you run your business, how you type, how you speak. It's learning you, the platform. Is that accurate?
Correct. Yeah.
Okay, my main concern is liability exposure, not yours, but mine as an advisor, right? So I go in and then this thing is producing content or information that's saying, "Hey, this is Mr. and Mrs. Client. We got your C corp or your Schedule C set up and all this business stuff, and but you should be doing this." Is it providing advice from that perspective, and then I'm supposed to sign off on that advice? How does that work?
Well, so it's giving suggestions to the advisor,
Suggest. Okay.
right? And
Okay.
then the
Gotcha.
advisor can determine if they want to present that or not.
I
Doesn't
gotcha.
have to be presented. And every single thing that it calculates is citated, right? So you don't have to worry about like where the hell did they come up with this information. It's
Yeah.
actually going to have a whole list of the citations, every single calculation. In fact, when you hover over, we're doing a release here. I think it'll come out maybe the end of this week, but where when you even just hover over any calculation, it will show you like here's where this was sourced and here's how the math was done. So if it's something like your AGI or something,
Hmm.
it's like we got this from these five different pages on your 1040, for example,
Mm,
like right, or,
gotcha.
or your 1040 plus your Schedule Cs, et cetera. And so I do think that, look, at the end of the day, when
Hmm.
you present a financial plan to a client that came from any financial planning software, ultimately you're taking responsibility for
That's
that.
true.
Did you go through and
Yeah.
rerun their Monte Carlo simulation?
You know
Like,
what?
did you run
You didn't have to say
10,000
that,
iterations manually? Like, no,
Jason.
of
Come
course you
on,
didn't.
man.
Right. So it's the same thing that's happening here. Like we're building software to make it easy for you to give good advice, but ultimately it's software for advisors.
I gotcha.
It's for a consumer, and the advisor is always going to be that intermediary that can either say this isn't something I want to share, or it is, or they can prompt Hazel to do a new draft with the changes they recommended. So like it could be like, hey Hazel, I know you came up with these four suggestions. I don't like two of them just because fundamentally they're complex and they're not going to be that beneficial. So let's eliminate those from the plan. And then when you
Mm,
go to generate and turn that into a PDF and have it be all beautiful and branded, it's just the things you wanted on it, right? So
yeah.
this is kind of one of the things that's
Mm,
cool is that again,
mm,
historically, if you're using regular out of the box software, you can't do it like that. There's no like
yeah.
expandability or sort of retractability of small individual sections of the analysis inside of a broader financial planning or tax planning software. So anyway, I do think like you're spot on to be asking those questions. Every
Yeah.
advisor should do that really of every vendor that they work with.
Yeah. Yeah. Jason Wenk, Altruist. Couple more questions if you don't mind. Just two more questions, man. I love
Fire
having these
away.
conversations because again, you guys are doing something that's disruptive. Um, from a business perspective, we often talk about enterprise value. We talk about what we can sell the business for. What do you think something like this is it additive to valuations or is it detractive because it's actually making things a little bit easier in regards to like I guess the word is like people are if we're doing better with business, then prices should come down because it's more competitive and more people using it. So what do you think in regards to how this will ultimately allow us to sell our business from a multiple perspective if we're using something like this in the future?
Yeah,
I know it's
I think
hard
the
to say, by the way. I'm just kind of,
Nah, I mean, so ironically, I know a fair bit about this. For those who don't know, I've sold two RIAs,
uh,
and so I've been on the seller side of them and involved in a lot of other transactions in this industry. But
yeah.
so if you think about like what is it that drives valuation,
Hmm.
so there's a handful of things, but off the top of my head, the earnings is a big driver. So
Of
usually
course.
it'll be an earnings multiple.
Yeah.
And earnings, of course, is your revenue less all your, it's more complicated, of course,
Yeah.
but
Yeah.
it's
Yeah.
revenue less your expenses, right? That's
Yeah.
your
Yeah.
your earnings. And so if you have less expenses, you will have higher earnings, right? So I'd say
Yeah.
one of the first things that happens is your earnings goes up.
Yeah.
The other thing that's a really big driver of the multiple is your growth rate. So is
Mm,
your firm growing at basically, you know, under 6%? If so, you're going to get penalized on your
mm,
multiple. If you're growing at, say, 6 to 8%, you'll get kind of a standard multiple. If you're growing at, 8 to 10, maybe a little bit better. If you're growing at greater than 10%, you're going to get the maximum multiple because you're
mm.
a high growth firm.
Yeah.
Now, the source of the growth matters a lot. Is it organic growth? In other words, if you're getting custodial referrals, that's not valued very much because those can be
Not
taken
anymore.
away from you.
Yeah.
So is what you're doing, is your actual practice driving the growth, or is someone just giving it to you, right? I would argue that if you're giving your clients objectively the best possible outcomes,
Mm,
you're giving
mm.
them amazing services and you're doing it really efficiently, that gives you the highest probability of having a high organic growth rate, right? You're delivering a
Mm.
great value to your customers. So more than likely, that means that tools like Altruist and Hazel, this is going to reduce a lot of the friction and pain of serving clients. It's going to increase the quality. It should drive better outcomes. So the
Yeah.
actual client should have better outcomes. These things should drive more organic growth in the business. So if you have basically high organic growth and you have high earnings, like a good, good amount of operating leverage, that's how you
Mm.
get maximum kind of valuation out, kind
Yeah.
of throughput. And I can tell you that there's a whole kind of like interesting group of buyers that are looking to just buy altruist firms, right? So I get inbounds nearly weekly, but certainly monthly. And we've already vetted a few firms that we view to be very high quality firms. They're already working on Altruist, and they specifically want to buy Altruist firms. Well, why do they want to buy Altruist firms? Because they don't have to switch them off from Schwab and
Yeah.
Fidelity or
Yeah.
whatever, right? They don't have to like
Yeah.
do the pain of like migrating a whole. They want it just to be efficient from day one because they realize that if you're going to be an aggregator buyer of firms, like you need to have significant automation in order to, at scale, continue to have leverage, right? So
Mm.
I think it's kind of interesting. Those same buyers, they are buying firms on those other platforms, but they're paying lower multiples because they
Yeah.
realize that they're going to have to do a transformation of sorts to those less efficient firms to get them onto their newly efficient platform they're building on Ultra. So I do think that look, we're all foolish if we think that our firms won't sell one day. Like all of us are mortal.
Yeah.
Someday we won't want to work anymore, whether it's a next generation, of partners in our firm or it's an external buyer. And even I think we owe this to our clients to run really good, efficient businesses that are kind of, I wouldn't call them entirely, market proof, but you certainly want things that can sustain all of the ups and downs of markets, interest rates, market, growth rates, et cetera. Um, Running a really efficient firm is always the best possible solution, right? It's good for everybody.
Yeah, I love what you're saying, man. And then lastly, like the road ahead, these custodians, they're taking notice right now. And Altruist is doing big things. They have a lot of things coming out this at the rest of the year. What what's your expectation in regards to custodians moving forward? The I don't want to mention their names, but
Sure,
well,
sure.
you already mentioned them, Schwabs, the Fidelities,
Yeah.
the Pershings, and all the other stuff. Are they either going to get have to follow the leader, or they're going to say, you know what, let them do their thing. We're still the big behemoth in the room. No one's going anywhere. I mean, what are your thoughts on that?
Well, obviously, I don't know if, obviously what's happening inside of their boardrooms, but those are all the companies named, by the way, are like incredible companies, and I
Yeah,
admire them a lot.
yeah.
the whole RIA channel pretty much wouldn't exist had it not been for Schwab. I think
Yes.
they were the most important company to support independent advisors 40 plus years ago, and especially the last 20 years.
Even with the dumb commercials that they put out there right
Yeah,
now, I
yeah.
mean, talking
Listen,
bad about us, it's crazy. I'm like, come on,
yeah.
man.
Yeah,
I
I
get mad
bet.
about that. I've told them about that a couple of times. Go ahead. I apologize.
Yeah, no, man. I think I mean, listen, this is the reality is like the tough part for they in Fidelity are kind of unique in that they have really big competing retail businesses.
Yeah.
And so it is hard to serve all those masters. Whereas if you look at like us or LPL or Raymond James or something like we're all predominantly supporting advisors or
Mm.
in like us and LPL, we're exclusively supporting advisors, right? So it is easier, I think, if you have an exclusive like focus, like who are you built for? Like every single resource dollar that you spend, like we don't invest any money in anything that does not help advisors or their clients.
Hmm.
Obviously, some of these companies that have two or three or four or five business lines, like they have to make educated decisions every day on where to allocate capital. If your direct to consumer business is two or three times more profitable than your advisor business, and they're the same size in terms of notional dollars, of course you're going to put all your investment in your retail business. Like it just makes a lot more sense. We would all do the same if we were in
Yeah.
their shoes.
Yeah.
You'd still give some investment to the advisor business because it's not like it's trivial. It's,
Yeah.
it could be trillions of dollars, even if that's smaller margins, it's still a big business. It's not where you'd put, you certainly would not invest there at the expense of investments you could make in your higher profit margin business. And it's like way bigger profit margin business too, not just like marginally better. So I think like what will happen here, again, TBD, but I can say that uh, one of the hardest parts for all of the older firms is that when you build anything, a certain amount of your existing resources have to go just to maintain the thing that you have.
Yeah.
Right. So if you build a software application and let's say you have 100 engineers, at some point, 40, 50, 60% of your engineers are literally full time just maintaining the old platform. They
Yeah.
can't actually invest in anything new.
Hmm.
And the older and the bigger that platform is, the higher that percentage tends to be. So you get a
Yeah.
big old platform that was 50, 60, 70 years old. And even if you have 2,000 engineers, there's a good chance that 1,400 of them are in maintenance. Like they are
Yeah.
largely just kind of keeping the lights on.
Yeah.
And so, like, rapidly building new features is hard. And then on top of that, if you were to rebuild something, you'd have to rebuild the entire
Entire
product
thing.
end to end and then do a massive migration. It just
Hmm.
becomes incredibly complex and hard to do. So I do think like people are always going to be looking for solutions. Like if I'm any of these bigger, older companies, I certainly would have some level of insecurity and kind of going, well, where should we make investments? No doubt they're probably pouring billions of dollars into making their platforms more stable, more digital first. But again, we have to keep in mind that I don't think any other custodian on planet Earth in any country that serves advisors can open more than 15 accounts digital, other than us, right? Like,
Yeah.
so everyone else is still trying to do like very basic fundamentals, that really should have been done 15 years ago, and they still aren't doing it this day. Like the vast majority of their account types and their forms and their processes still require PDFs and DocuSign and manual processing. So this like new era that we're entering with I mean, how on earth are you going to build a world-class AI platform if you're still largely, using, digital forms,
Yeah.
like digitized, paperwork, basically. So I just think we have a long ways to go, and I think that's a big advantage we have today. How long will that last? I don't know, right? There'll be some other technological innovation in another 10 or 20 years, and someone will probably be saying the same thing about me. They'll be like, man, Jason Wenk, he knew what he was doing in 2020, but he's an old man now and his platform's old, right? Like this is just how technology works. So we'll have to be really diligent to make sure that we're constantly making the investments in infrastructure. We're replatforming where appropriate. We are examining our architecture and being hypercritical of it because if we don't, we will end up just like everyone before us, which is with a big
Mm.
monolithic, kind of hard to manage, hard to scale, hard to modernize, huge hardened platform um, that it can no longer keep up with like the latest and greatest nimble tech companies, right? I don't want that to happen. So I'm beyond bullish on like where we are today and where we'll be over the next couple of decades. I think it will just get harder and harder for those incumbents. And I do suspect this is a big part of why you know, is it rational that the market sold off $120 billion because of our AI products? Probably not. But this is not exactly the wrong reaction, meaning like the market oftentimes gets the timing way off, but the
Hmm.
direction is not always off. And in this
Hmm.
case, it's one of these things where if over the next decade, advisors, in our case, they start to have the ability to run their business for 90% cheaper, and they can offer 2 to 3 times, the quality of output for their clients.
Hmm.
At some point, even the inertia and pain of changing their clients from one platform to another is no longer greater than the huge amount of upside they get from making that change. Once the assets start to move, then it's a really big problem, right, for these
Yeah.
older institutions. Today, they're still pretty insulated because inertia is still so high. Most people are kind of lazy. They're not going to do much. But if these AI innovations continue to compound, and we're sitting here in 2 years, and we can very objectively say that every advisor that's basically using old platforms is at some type of, it's no longer a 10 or 15 or 20% incrementally worse platform. It is like an objectively 5 times worse platform.
Yeah.
Then eventually the money starts to move. And that's when the change really starts to accelerate.
Well, last thing, consolidation in the industry. Do you see more of it happening right now, or do you think we're kind of done with all of that at this current juncture? About Commonwealth to Raymond James, all that
Oh, yeah,
stuff,
yeah.
LPL, Commonwealth to LPL. I mean, what do you think? What do you see?
Well, so at the platform level, there's not much left to consolidate,
Exactly.
I mean, what used to be 500 IBDs is now like 4 IBDs, right?
Yeah.
And what used to be a dozen custodians is now really just like 3 or 4
Is
custodians.
that a bad thing? I mean, I thought competition was good, but
Yeah.
now it's like it's a handful. Like, is that a bad thing for us as advisors?
Yeah.
Just retail.
I'm with you. I love competition. I think it's important. I think it's the same reason why like I'm kind of, yeah, very much somewhere between undecided and pessimistic about the aggregation of advisor firms, right? So these
Yeah.
RIA aggregators buying a bunch of firms, like in some ways I think, oh, how cool is this? Because I have friends who've been grinding for 20 years and now they can sell and get a great exit, and that's wonderful. But part of me is thinking like when I started my first RIA in 2004, there was like maybe 4 or 5 thousand RIAs in the country.
Yeah.
Um, and this whole channel exploded in growth because people wanted to be entrepreneurs. They wanted to be independent. They wanted to be able to represent their clients' best interest. They wanted to get away from being employee advisors that were controlled by shareholders, right? Like,
Yeah.
and now you look at what's happening and you're seeing a consolidation into this very environment that people wanted to escape, 20, 25 years ago.
Exactly.
And I'm actually a really big believer in smaller RIAs. Like, and I know some people take offense to that, but what I mean is like, uh, I love it when we can meet an advisor, and I'm from like a small farming community in West Michigan. If somebody came to me and said, "Hey, I know it's not for everybody, but I want to build a small RIA that's going to be local, serving clients face to face, going farm to farm, supporting all the small independent farms in West Michigan."
Mhm.
Uh, and I can only do that because of Altruist. There's no minimums. I can run my whole business with basically no employees. And it's okay if my total revenue is only $125,000 because my take home is 120.
Mhm.
And that's a pretty good living for its worth in rural West Michigan where I'm from, right?
100%. Yeah.
If someone says that, I'm like, that's amazing. I think that's a net positive for humanity. It's another small business person in a rural community serving people locally, connecting at a level that matters a lot more than if they're just a account number at some big financial institution, right? That doesn't
Mhm.
care about those people, understand their hardships and so forth. And you could use that same exact analog across so many different special groups of people that need advice and they want it to be coming from one of their own, right? So
Mhm.
whether it's like someone literally in their community, someone who I used to be a hairdresser and now all I do is I serve other hairdressers, right? Like whatever
Yeah.
that kind of analog is, that's really important. And if all of a sudden every single advisor is part of like some big box brand, and that big box brand does not care about the hairdressing community. It doesn't care about the farmers in West Michigan or
No.
whatever kind of niche market you're thinking of. So I think that competition is net good. It gives people access to better advice. Small business in general is good for America and good for society. And I think at the custodian and tech vendors, level, yeah, totally. Like if we consolidate to a world where the Kitsis fintech map is like four logos, I don't know that that's a better outcome, right, than what it could be. Now, that might be the direction we're headed, for its worth, is like where
Mhm.
I think there'll be massive consolidation. So all that we can hope is that the people that control one of those four logos have a soul. And they remember why they started those companies, and they really are doing it to make advice better, enable advisors and empower them, drive better outcomes for their clients, make advice, more accessible to everybody, right? Like the things that really, really matter. If if that happens, we're okay. But it's very common, right, for that not to happen, and you end up getting like people that they leverage that kind of duopoly, oligopoly, monopoly type of status to drive the prices higher, make things less accessible, marginalize certain types of advisors. That is not the future that we want, right? So it's going to be a really interesting next decade to see how this all plays out.
Jason Wenk, Altruist, explaining to us that if we have these four aggregators left, hopefully one of them has an altruistic soul. If they don't,
Yeah,
God help us all. Jason, man,
yeah.
thank you so much for this. This has been phenomenal. Hey, send me that link, by the way. I appreciate it. But
Absolutely.
hey, thank you for joining the 90s podcast, my friend. Any last words for the group?
Just thank you, man, for what you do. Like everybody that's in this industry, if we could all give back a little bit to the industry's much better, right? So glad they're using your influence and your platform to give back, kind of get people like me out there in front of others. It means a lot for me to have that. So I really appreciate it. And again, I'm sure there's, you know, hundreds of other advisors out there that are kind of like, I wish I could do more like what Kevin does. And hopefully like you doing this inspires them. And again, we all end up creating this like really nice flywheel of giving back. Thank
Yes,
you.
sir. Thank you for joining, my friend.
Cheers.
We just had Jason Wenk of Altruist on the call today talking about disruption, talking about what's going to happen next with Altruist, talking about the waking up and changing the game, the age of disruption. I am excited to see what comes out of them. I am excited to see where they take the industry, especially as we continue to see consolidation in regards to RIAs, consolidation in regards to custodians. We have a lot to be thankful for and a lot of technology coming to us that's going to make our businesses greater moving forward, whether that's higher multiples, higher valuations, and better offerings for clients. As I always say, subscribe to the channel. Go and get my book, MOB to CFP, live on Apple and Amazon. You have any questions, comments, or concerns, you can email us at info@99capitalgroup.com. Send us your questions. Go to the website at www.99capitalgroup.com. Schedule an appointment. As you know, we're here to do what? Educate, empower, engage, and also entertain. Follow us on all social media channels at 99cap or at MOB to CFP. And subscribe to our Substack. Now what? Jason Wenk, founder of Altruist, thank you for joining us. Age of Disruption. Can't wait to see what's next. Stay humble, stay safe, my friends. I'll see you again soon.